Over the last few months, I've seen a number of deals come my way, especially in the off market, some on the MLS, where incomplete or abandoned construction sites are being sold for pennies on the dollar. In this video, I'm going to talk about why this is happening. And if you're thinking about building custom, I'm going to go over everything you need to know about financing, vacant land, construction loans, and everything you need to avoid becoming a statistic. If you like this type of content, please subscribe to the channel, like the video, and in the first link below in the description, you can contact me at your convenience and I can answer any question you may have. My name is Vas. I'm a real estate broker right here in the city of Toronto, where I provide insight and data to my clients who are usually families and investors looking to navigate this fairly complicated market in the greater Toronto area. First, some quick housekeeping. This wall behind me, I just printed this map, and if you'll notice, it actually crops out the entire West GTA, and it's basically going north to Barrie and east to Cobourg and Peterborough. The reason this map's behind me, I'm trying to spruce up my background. I think it's a bit of a fail, and that's okay. It's a work in progress, but everybody was making fun of the old lamp I had and everything else. So here we are. I'm trying to work this through. I might actually renovate this whole space. We'll see. I always focus on the content, not so much on the background, but I'm hearing you guys, you're telling me the background's boring, so I'm going to try to step it up, but for now, just deal with my map. And if anything, this is where I think appreciation over the next 10 to 20 years is going to happen. It's going to be north, east, and I would just kind of ignore the west. I think it's way too saturated and competitive. But anyway, back to construction loans. So let's assume you want to build your custom house, your dream house, and you want to buy a vacant lot and then build. So how do you go about doing this? So obviously you need some cash on hand, but here's how typical financing works. And by the way, there's many ways to do this. I'm just going to tell you the tribal knowledge that I've learned from having done construction myself and just seeing some of my own clients, how they do it. I'll kind of give you the idea of best practices and typical going rates right now for what it takes to get it done. So first, you need to finance your vacant lot. So let's say you buy a vacant land lot for $1 million, no house on it. This is important because if there's no house on it, it becomes a lot more difficult to finance. So in this case, let's say it's $1 million. Usually a private lender is where you're going to have to go, and they will give you a loan to value of, let's say, 50 to 60%. So let's say it's $1 million. You're going to need to come up with at least 400,000 cash to buy it. And then a private lender will give you an interest only loan. So these are non-amortizable loans where you're going to pay, let's say, I don't know, 10, 11, 12% in interest, which is going to be paid out every single month. There's ways to do it where you can bake in an interest reserve at the end if you take a bigger loan. But anyway, I'm not going to get into the specifics. Just assume 10, 11, 12% in interest only for 50 or 60% of the lot value. So once you've secured this, the time starts ticking. So you're making your interest payments, let's call it $600,000 mortgage, interest only at 10%. You're paying $5,000 a month to have this lot, right? Now what happens? Now you're going to get with your builder, you're going to apply for permits, you're going to get into all of that. So you're looking for a construction loan. And generally how I've seen construction loans done is once you have the land tied up, you're going to go to a private lender now as well to get construction financing. And typically what they want to see is they want to see you put some skin in the game. So let's say you might have to put in 15 or 20% of the construction cost to build your custom home up front. They're going to give you a commitment letter that once the footings and foundations are poured, they're going to start releasing the tranches of the funding commitment that they've given you. So let's say it's going to take you another $1 million to build. You're going to put in $150,000 to $200,000 of your own money. Once you've met the milestone where you've gotten your permits, you've poured footings, you've poured foundations, then the lender is going to start releasing money. Now, what I'm seeing right now is I've seen a handful of sites just like this where the footings, foundations are done, and all of a sudden everything comes to an abrupt end. Why is this happening? Now, for privacy reasons, I obviously cannot share any of these deals or sites, but what I can tell you is typically what will end up happening is either two things. For anybody that's built custom, usually you know it's going to take longer than you usually think, and it's going to cost more money. So generally right now, I can tell you there's delay in permitting, delay in everything. Well, carrying costs have gone through the roof, especially when you're dealing with loans or mortgages that are interest only. For example, for vacant land or construction, these are non-amortizing mortgages. So you're effectively paying interest every single month just to hang on to this piece of land or to be building. So in the example of these vacant lots with footings and foundations that have been poured on and they're being sold for pennies on the dollar, typically what will happen is the construction financing commitment that they arranged earlier on, chances are because market conditions have changed, interest rates keep going up, maybe the lender, who's a private lender, has gotten spooked and they're like, you know what, I don't want to lend to you at this rate based on the performance I've seen so far, how long it's taking you, how much interest you've paid so far on the land. So they may say, you know what, this is too big of a risk profile for me, so I have to either jack up the interest rate on you in order to take on this private funding, or I'm just going to pull the construction financing and you have to find somebody else. Now, it's not that easy. I'm just kind of giving you in between the lines effectively what the ultimatums are structured like, and this is what people are dealing with. So then you, as the person looking to build, you're kind of stuck. So what do? You have a couple of options. Obviously, you can find some money somewhere else at a higher rate, but then effectively it's going to make your project likely underwater, and you don't know what it's going to sell for in 8 to 12 months or whenever it's being built, because the market is just so volatile. So then you'll either be forced to effectively sell, to liquidate and pay off all of your loans and put this whole thing to bed, and you take a bit of a haircut, or you're going to be forced to do it because maybe your vacant land loan is coming due, and maybe that lender also feels that the vacant land is no longer worth this because the market has changed relative to the time they gave you the loan. And then if you look to shop around and get some other private money to replace it, likely it's going to be more expensive. I will share a few anecdotes with you on construction and on building to show you how people get themselves in trouble and what you can do in order to not become a statistic in the future. So I recently had an off-market deal come my way, which was a building site where footings and foundations were already poured, ready to go. And apparently the lender that was going to lend on the construction pulled their financing last minute. These people didn't know what to do. Any alternative was a lot more expensive than they had budgeted. Effectively, they had to sell the lot for 65 cents on the dollar, and they had to sell their primary residence to basically settle any other outstanding debts they had to get to the point of construction where they were at, for all the permits, all the carrying costs and interest that they had incurred to that point. Now, some lessons learned for anybody thinking about building custom, some ways that you can kind of hedge your bets and avoid some of these mistakes. So number one, these people, they went ahead and bought a lot in the country, and they didn't do any due diligence on the lot, meaning you want to engage your builder, whoever's going to be building your custom home, you want to engage them early on with lot selection. The reason for that is building on this lot versus that lot can be very different in terms of cost, depending on who the municipality is, the terrain, the soil, and everything else. So you don't want to be just blindly looking and buying lots unless there's some sort of a unique feature that's the only lot you can buy. But at that point, you better be very well capitalized because you know there's going to be costs coming up your way. So there was no builder involved. The second problem is that market value of building lots or vacant land can vary dramatically. And the reason for that is there are very few comparables and very few people that know how to or understand how to value these lots. So for example, if somebody's asking X amount for a lot, that doesn't mean it's worth that or even 90% of that, because you don't know how they came up with their comparable. And maybe you do, but I don't know if it's justified. In this case, they ended up paying market value, or whatever the asking price was for this lot, when the market value of the lot was substantially less. And that was proven when their private lender came in with an appraisal for this lot and decided that they're not going to lend them anywhere near what they paid for it because they didn't feel that it was worth it. So at this point, you've picked a lot that's difficult to build on, and you've overpaid for a lot. And at this point, what happens, you're pulling basically a lot of your cash reserve to bridge this gap, because now you've had to put a substantially bigger down payment on the land. You have a smaller carrying cost because of the mortgage, but where do you sit now with a lot that's worth less than what you actually pay for it? It's a very difficult position to be in, but here we are now. Now, the general rule of thumb with construction is once you have a budget in mind and a timeline, typically you're going to go over budget and it's going to take longer than you think. It could be because the municipality takes a lot longer with your permits. If you're in a conservation area, you have to get approval from the conservation. They usually move a lot slower. And if you're not working with a builder up front to know all of these things, then you wouldn't have factored in that you'd need another 12 months just before you can put a shovel in the ground at the very least. So as you can see, things just compound and compound and compound. And then to make it matters worse, interest rates went through the absolute roof, and nobody saw interest rates going up as fast as they did. And this is how you now have so many people who have had to lever up to buy these lots and build. They have absolutely no chance because you're carrying costs of vacant land and construction loans, like we're talking $10,000 a month plus to be just carrying it. It's basically doing nothing but paying interest. Effectively, you have to come to a decision point where you decide, do you just cut your losses, you crystallize the loss by selling for whatever you can get now, or do you keep paying this interest cost until you come up for renewal, at which point you're likely going to get renewed, if you get renewed, at a higher interest rate. So it's a very difficult situation, and this is why you're seeing these unfinished lots come up for sale for pennies on the dollar, because people really have no chance of getting out of them. And guess what? If somebody's coming in to buy these lots, usually they're not going to be your typical middle-class Canadians looking for a house. It's going to be, builders or somebody that's an opportunistic buyer, which makes sense. The moral of the story here is that if you have to lever up to build custom, building custom is likely not for you. For most of my clients that I've seen build custom, usually the vacant land or whatever lot they're building on usually is free and clear. So the only thing they have to worry about is the construction cost. That gives them a lot of flexibility between getting permits and putting a shovel in the ground. However long that process takes, they don't have these exuberant carrying costs just to get to that point. And these are the people that usually make it out okay, but even they suffer from overages and more delays and trade delays and whatever have you. If you found this video useful, please subscribe to the channel, like the video, and I'll see you in the next one.